Hello everyone, how's it going? In today's video, we're going to talk about Mullen's recent shareholder meeting and the confirmation of the highly debated reverse stock split. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel. And also, please take a look at the equipment links that I've included in the description below. Any purchase made through those links will yield me a small commission. So thank you in advance for your continued support. And let's begin with today's topic. So it has really been a very bumpy roller coaster for Mullen, with the pre-market trading showing a very unexpected 5 to 8% increase. I mean, of course, we have now learned that Mullen has announced the launch of two new apps, Mullen Commercial Post and Mullen Commercial Post Fleet. So both of them will suggest that they are ready to expand their fleet and distribution capabilities. Of course, that is just an intention. We have yet to see what's going to pan out of them. And also, we have to determine with time whether this news has any sort of impact. Because we got to remember, previously, there were quite a few positive news that a company has announced with little to no effect in stopping the price, like the share price hemorrhage. So the highlight of the day, with that being said, wasn't really like the launch of those two apps. It was really the controversial proposal number 3, the reverse stock split. That really was the center of all the attention. As the discussions continued, there was some audio disruption and then some confusion leading up to it. And then David Mitchery, the CEO, clarified that the proposal was approved. Now, we have yet to see any sort of official 8K documents confirming the voting results. All the proposals except number 4, which lacked a quorum, were approved. So we're now waiting for the announcement that the reverse stock split ratio, a very crucial decision that will determine whether Mullen can stay in NASDAQ, because the rules of the exchange on reverse stock split means that Mullen must tread very carefully here. A ratio between 1 to 2 and 1 to 10 can secure any sort of future extensions. If the ratio goes from 1 to 11 and 1 to 100, might jeopardize the compliance, and investors are very anxious to see how the whole thing unfolds. Now, the company itself has announced that they want to regain their compliance by September the 6th, which requires about 20 consecutive business days with a share price above 1. If all goes well, the reverse stock split should take effect around August 8th, with an official announcement expected either on Friday or on Monday. On another note, Mullen opened new tour locations in Austin, Texas and New Orleans, offering investors a chance to connect with the company. That's to put it very nicely in my mind. As for trading activity, the call purchases and put options remain relatively balanced for the time being, with some short hedgings going on as well. So what this means is that the company may be long on the position and then buy put options to hedge their investment. So as things currently stand, the short interest in Mullen is still very significant, with about 24% of the free float being shorted. The borrowing cost is around 8.6%, which maintains their range over the past month. Mullen is a publicly traded company operating in the EV sector, and it is listed on the NASDAQ stock exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that a company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing IGOs in Europe. So this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning, to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So, like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So, the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So, the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So, currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. So my recommendation for Mullen for the time being is to stand on the side and to wait for a better opportunity to either enter into a new position or to cash in the existing exposure. A lot of the things are still in the flux for the time being, and it's too early to determine with certainty where things might be going. With that being said, my personal opinion is that where things stand, Mullen weathered a major storm, and most of the bad news have been priced in. And this is why waiting may be the best thing to do for the time being. Now, with that being said, there is one exception, which is the market, I think at this current stage, does not expect Mullen to be delisted from NASDAQ. And this is why, if on August 8th things don't go as planned, we may actually see a major nosedive in its share price. This is not a very likely scenario in my humble opinion, but we should definitely consider this as a real possibility. Things can also go well, and in this case, well, obviously the price is going to take off, but if your exposure in Mullen is very significant, like if it's more than, I would say, 5% of your portfolio, then I would say that for those kinds of situations, maybe consider to liquidate part of your exposure in Mullen now, so that by August 8th, you're not like cornered. to make a decision to take a far heavier loss, potentially.